Good afternoon, everybody, and thank you for joining AFME on our webinar on the evolving settlement efficiency landscape in Europe. We are live from sunny London, but it's not just the temperature which is rising. Settlement efficiency rates are increasing across the board, driven by a number of factors, including regulatory change, from CSDR settlement discipline penalties to the forthcoming move to T+1, as well as a changing macro environment and increasing interest rates. We're going to dive a little bit more into what the market has done so far to improve settlement efficiency, what we need to do going forward to continue on that trend. And I'm delighted to be joined by a great panel of experts to lead us through the discussion. We have Matt Johnson from the DTCC, Jesus Sanchez from SIX, and also my colleague Pablo Garcia from AFME. There is a Q&A function available to attendees, so please don't be shy, put your questions in, and we will try to answer as many of those as we can during the session, but also with some dedicated time at the end. We're going to start by maybe setting a scene in terms of what the data is telling us. So Pablo, maybe if I can hand over to you to walk us through that. So I think we can see clearly, but settlement efficiency is trending upwards. Settlement fail rates are trending downwards. But can you dig a bit more into that? What does the data say?
Yeah, thank you, Pete, and good afternoon, everyone, and thanks for joining us for this webinar. So actually, just before we start, so I would like to share my screen as I've got some slides to help frame the discussion. Just bear with me whilst I share it. So starting with basically, we've analyzed different data sets from different resources. So the T2S annual report, the ESMA report on trends, risks, and vulnerabilities. And finally, we'll be running through some data from AFME analysis of CSD's annual public disclosure on settlement fails. So starting with the T2S annual report, so the report shows two things that are happening at the same time. If we look at the volumes and settlement efficiency over time, so we can see that settlement volumes in T2S have continued to gradually increase over time. I think this really reflects the importance and the relevance of T2S as a pan-European settlement infrastructure at the core of European capital markets. I think if we look at the settlement efficiency with regards to those volumes, we can see that in volume terms, they've not really returned, the efficiency has not really returned to the rates that we had prior to 2020. We see a noticeable drop from 2020 onwards, and although there was some stabilization on the following years, is still not up to the point of the earlier stages. So namely, just to mention in 2025, the settlement efficiency in volume stood at a 93.5%. And actually, that represents a decrease of 0.9 percentage points compared to previous year, 2024. For me, one of the main takeaways from this diagram is that it shows that the system is effectively handling more activity, but the efficiency challenging has not completely gone away. So moving on to the next slide, looking at the value picture, it gives us a slightly different perspective. So on the value side, the picture is somewhere much more positive. We can see that settlement efficiency has clearly improved with regards to the value of transactions, of instructions. We can see really a breaking point since the introduction of CSDR settlement discipline regime with the implementation of cash penalties. And we can see that that is pairing along with consistent growing volumes of settlement in T2S. So positive picture if we look at the value, just namely to comment on the last year. In 2025, settlement efficiency in value stood at 98%, and that represented an increase of 0.3% compared to the previous year. So this is what the T2S report tells us. Then if we actually look at the report that ESMA publishes on reports, trends, risks, and vulnerabilities, particularly the latest one from March this year, it covers settlement efficiency, but also a number of key performance indicators in EU capital markets. So we can observe that on this latest report, the ESMA pinpointed at a sharp spike in EU CSD settlement fail rates, particularly in the month of April and in relation notably to ETFs. That coincided with heightened trading activity and market volatility linked to a rapidly changing US trade policy. So this shows us, I think, as well, that something we need to consider, and I'm aware this has been raised before in various forums, that ETFs, as a particular security type, they represent still, and they're still an outlier. They still represent challenges in terms of settlement efficiency, and probably the industry should take a more thorough approach, trying to understand whether that's actually connected to the intrinsic nature of how ETFs may be even traded. And then if we continue with the analysis, so for this exercise, we did an internal analysis at AFME where we were looking at the historic trends of settlement efficiency since the introduction of the settlement discipline regime, based on the CSD's annual public disclosures on settlement fails. For the purpose of this presentation, we've taken a sample of 20 EU CSDs. So if we start having a look at settlement fails due to the lack of securities, we can see that the volume fail ratio has improved compared to 2022, but it remains above 5% in 2025. And I think similar to what the T2S stats were showing, settlement efficiency by value has significantly improved since the introduction of settlement discipline regime and cash penalties. Although for the CSDs analyzed, we observed a slight increase in fails last year. And then finally, to conclude this initial analysis, we just wanted to show on the same exercise settlement fails due to lack of cash. So probably to no surprise to anyone, we can see that the fail rates due to lack of cash, they're much lower. We can observe that these fail rates have been throughout the analyzed periods, they've always remained below 1%. And therefore, I think this really places the emphasis that it's more the lack of securities that is really putting more struggling and constraints into the system. Just to maybe conclude with some final takeaways from this analysis, I think overall settlement efficiency remains strong. I think the general sentiment is that there's been positive developments, notably since the introduction of cash penalties and the settlement discipline regime, but the picture is slightly mixed depending on where you look into the detail. I think also we can really tell that different sources of data, they point to different pressure points across the markets, and also some of them, they provide more insights on asset classes and different failed reasons. And I think overall, it also highlights that, we need a common golden source of reference data, more granular provision of settlement efficiency metrics for, the industry to really understand and address those challenges.
Thank you, Pablo. It becomes a little bit murky and difficult to analyze when different data is using different sources or different methodologies for calculating. But as a headline, I think the sort of CSD data and the ECB data points to, by value, a sort of average fail rate of about 2%, which is certainly a significant improvement from where we were, and maybe comparable with other major developed markets as well. I'd like to bring in Jesus now at this point. So, Jesus, in addition to your role at SIX, you are also chair of the T2S Market Settlement Efficiency Working Group or User Group. So, it would be great to sort of hear your perspective on this and how that data compares to what you guys are seeing in the MSE.
Good afternoon to everybody. And first of all, I would really thank you, AFME, for organizing this settlement efficiency webinar. I think it's a key initiative in general and particularly relevant as we approach, as everybody knows clearly, the implementation of T+1 for sure. In response of your question, it's true what you have said. One of the main objectives of the MSc Market Settlement Efficiency Workshop webinar, whatever is the name, everybody says differently, is to monitor the settlement efficiency within the T2S ecosystem, focusing on two key dimensions, as everybody can understand, volume and value. In this regards, and I will share with you now a PPT, well, a slide that I have made on my own because it's based on data is based on data of the ECB, but I have done manually, including all the statistics on a daily basis. So for that reason, is don't take this as a kind of official report, but more a kind of manual work done in order to be shared with everybody. As you can see there, the evolution of the ratios have shown divergent trends. In terms of volume, we have observed a slight but steady deterioration, whereas in terms of value, the trend has been the opposite, with a clear improvement as is rotating the chart covering settlement efficiency since 2020 over the past. So I think we can consider that this period of time, 6 years, is significant. More recently, as you can see in the graph also, however, we have seen a noticeable decline, which is currently under assessment in T2S. Every of the communities have to check why this, for sure. Although I think it's fair to be said that the methodology does not help as partial settlement, for example, and later we can chat a little bit more in detail on this, does not contribute too much to the volume settlement, but on the contrary, very significantly on value ratio. Because as every single instruction make done new, because some part of the instruction has settled, you have, in terms of volume, again, a new fail. But in terms of value, as you decline the amount pending, you have a very positive contribution to the settlement ratio. I wouldn't say that is the only reason, for sure not, but I think it's a very key element. Also, it's clear because penalties are based on the amount pending to be settled, and everything, financials, cost, everything is based not exactly on the number of instructions, but about the cash or the credit line open for the pending or remaining settle. Everybody is more interested not to settle many instructions, but huge amount of money, which is absolutely fair and obvious. I would like to mention another thing. As you have seen, the ratios suffer from time to time moments of drops. Clear degradation is probably 1 day, 2 days, specific times, with different reasons. With ESMA, I remember that I learned this word in English called spikes, and in the remit of MSc workshop, we discussed this deeply about some of these situations in order to see potential lessons.
We seem to have temporarily lost Jesus. Hopefully, he will be back with us very shortly. I think, Pablo, the data sort of shows a very similar trend to what we've seen in terms of that sort of improvement in settlement efficiency measured by value, but not by volume, perhaps given the, as Jesus said, the increased use of partial settlement facility.
Yeah, I think that's pretty much in line with what our own findings were showing, and that probably indicates that high value instructions, they're probably much more given due consideration to make sure they settle timely, and then we've got like a number of lower value transactions, but there may be multiple of these transactions where still there are a number of challenges to be addressed.
And what has our sort of, obviously we can say that overall fails are trending downwards, but fails still exist. So what has our previous analysis kind of identified as the main reasons for those settlement fails?
Yeah, thanks, Pete. So we in AFME, we've been following this topic on settlement efficiency for quite some time. It's actually one of key topics, I would say, very close to our heart. So in 2023, we published a report where we were analyzing what could be the main drivers of settlement fails in Europe, trying to look at how the picture of settlement efficiency in the European landscape looked like. From that analysis, there were a number of categories of issues where we bucketed as the main drivers of those settlement fails. I think starting with, and probably to not surprise by anyone, that came inventory issues. We've just seen it before on the data that we've just showed. Lack of securities. I know this always gets referenced. We've seen that, even on ESMA consultations, they are trying to address lack of securities. And the first thing that you could think about when, a settlement fail is due to lack of securities is, probably the seller didn't just have the securities in the inventory in order to deliver them, right? But as they say, the devil's in the details. So we shouldn't just really say that was the core reason, and there may be multiple reasons behind that. So, for example, there could be reasons in terms of like the level of trading market liquidity, right? For certain instruments where the market makers could not source their securities in order for it to be available. It may also result from internal operational issues. So it could be a failure to, for example, realign the securities from a different account or from a certain location in order to be available for the oncoming delivery. And also it could actually be driven by external factors. So you could have, in the chain of custody, you could actually have a seller that is relying on a different contingent of a delivery from another seller to their transaction, and therefore when that fails, that cascades throughout the whole custody chain. So in terms of inventory issues, I would say this is one of the top ones. Then the second one that we observed is, and it's a key topic for the industry as well, I think especially as we're trying to prepare for T+1 data quality issues. And we've just talked about that we need common reference data, a golden source of really readable and understandable reference data. Sometimes delays or fails can be attributed to incomplete or inaccurate data. This could actually be related to a number of causes. And so, for example, SSIs, they are becoming very critical we know there are a lot of works out there, starting, for example, the FMSB, that are really working on SSIs and standardization and templates. So changes, for example, in SSIs not being communicated or updated in time, that could be one of the causes. And then here we have, issues like place of settlement, place of safekeeping. And also we can have a number of other issues behind data quality items, such as delays in relation to instrument data, for example, some new ISINs that haven't really been onboarded or incorporated in trade capture systems within a certain firm. And then lastly, but not least, I think we really need to talk about as well about counterparty behavior. This arises when the information that is necessary for the timely processing of the instruction and is relying on the information provided by the counterparty, but this information is not provided in a standardized way, or is provided in an incomplete or inaccurate manner, or just simply it's provided late.
Thanks, Pablo. I think that's a good time to bring in MJ with his perspective from DTCC. So data quality obviously starts upstream with the allocation and confirmation process. So what are you guys doing in this space in terms of developing the product offering? What are you seeing in terms of T0 and T+1 matching rates as it stands today? How does that need to evolve as we move into a T+1 settlement cycle?
Yeah, very, very crucial points. And thanks again for inviting me to talk at the event today. It's always a pleasure to be part of the AFME events. I mean, the point of kind of data quality, data accuracy becomes like paramount to the success of any kind of shortening of any settlement cycle. I mean, from a CTM matching platform perspective, as you can probably guess, this is something that's very close to our heart and something we've been tracking, very, very closely along with task forces, committees, and policymakers and so on. So we started to interrogate the data in CTM through 2026, and I think what we're seeing now is really positive trends. So when we start to measure the EU20 markets, UK, Switzerland, Liechtenstein, the players that are going to really move and migrate our jurisdiction to a T1 settlement cycle, from an equities perspective, on average, same day match rates at that confirmation allocation level extremely high, just above 98% on average that we see, across our platform. And that's going to be crucial because if you imagine the allocation confirmation component is really the entry point for post-trade. It's the post-execution match. It's where trades then get ready to be put into the settlement cycle or sent to custody networks and so on, or down to CSDs in order for that settlement pre-match to happen. So again, an intrinsically important aspect of post-trade. Again, as we start to interrogate some of the data on the fixed income or the debt side, it's actually really, really encouraging and something I'm quite excited about. When we measured 2025 T0 or same day match data for fixed income, through 2025, it was generally kind of late 80%, 89%, and so on. But since the beginning of 2026, we've now seen that fixed income average same day match rate climb to just over 93%, which I think is a massive, massive improvement, especially where there was always kind of a 10% lag between equities and fixed income. So it's good to see the market really focusing on that. I know his PSET's been mentioned already. It's going to get mentioned at least another 10 times during this call. So another point I really wanted to highlight was PSET submission rates across, obviously, the platform that we operate, CTM, globally. And we're continually seeing PSET submission rates improving again since Q1 2025, where we really started tracking T1 data on behalf of the industry. On average now, I think the last cut of data we did, it showed that on average around about 97% of trades in CTM now have a PSET enriched, which is a massive positive, especially as we then start to focus on the recommendations that have come out from the UK AST as well as EU IC in regards to the PSET being a recommended data point that should be on the confirmation allocation messaging, and as well as, of course, all downstream messaging through to CSD custody networks and so on and so on. SSIs have already been mentioned, but I think by both Jesus and also Pablo. I think you can't really highlight enough the key and crucial role that SSIs play or that will play in the success of T1, across all of the European regions and jurisdictions and markets and so on. So we're very pleased to say that, as you guys know, we also host a very well utilized SSI utility or SSI repository, which is Alert. And again, what we see from the Alert perspective is the sheer volume of SSIs keep going up and up and up in Alert. So I think at the last count, we're at around about 17.5 million SSIs are now housed in that Alert repository that's open access to our members and users. The real crucial point on that is the quality of data and where the data is coming from, which again is an uptick. So now nearly 60% of all of these SSIs are coming from source providers, providers such as the global custodians, the prime brokers, which is hugely important because it alleviates the SSI burden from the buy side, and it allows the source providers to make sure the data could be sent directly into the Alert database without being touched or filtered in any way. So we know it is golden source data. And again, I think we're up to something like 12 global custodians are now part of our Global Custody Direct or GCD program. And interestingly as well, we're now starting to see a good uptick of prime brokers as well that are supporting the hedge fund or the alternative community. Around about 10 to 12 prime brokers also now pushing SSIs into the platform. And I think kind of a closing statement or closing point, another element to consider is it's only really possible to track, analyze, measure performance in the way I've just described when automated or electronic platforms are being used for a core part of the post-trade process. I mean, for those firms that are still manual by nature, I don't know, the behaviour has been mentioned, and it will no doubt be mentioned again. It's the toughest thing to change across market. But you can't track and analyse performance if you're still sending Excels or pushing PDFs, or even worse, the dreaded fax machine. So again, it's another reason why we need to focus to make sure all of the market participants are really focused on automating their full post-trade workflow front to back.
And how can we reach that sort of smaller part of the market, Matt? It seems to be the perennial challenge, particularly in the T+1 context.
Yeah, without me saying the really obviously commercial answer to that question, it's collaboration. I mean, what we're now starting to see is, especially across your sell side community that you represent, the big broker dealers, the execution agents, and so on, is these are the guys that are still executing, offering markets and prices to these smaller manual community. So it's partnering with these firms to really present the benefit of how automation is going to help them create settlement efficiency and increase their own performance. And again, it's the collaboration. Andrew Douglas and Giovanni talk about it a lot, but we're all in this together. We need to work and move the market in the right way at the right time in order to make sure T1 is a success. And I think now is the time to continue having those conversations and making sure that those introductions are being made, the partnerships are being forged, and that collaboration effort is underway to make sure that we pinpoint who these clients are and where they're operating, and make sure that we can present the facts to them, and make sure that we can also present the benefits of automation.
We've had a question which asks about the 98% same day matching and whether that pertains to settlement instructions. So maybe, Matt, it could be helpful if you could just differentiate between that sort of trade level matching in CTM and how that translates into CSD level matching, and is there kind of alignment between the matching processes or sort of fields to be populated, let's say?
Yeah, I mean, in theory, there's definite alignment, and as we've built much stronger and forged much stronger relationships with the custodians, the custodians, the CSDs, the ICSDs, the CCPs. We've really started to understand, what's necessarily needed and so on. So when we start to look at CTM matching, it's where we're matching on the trade economics. We're also enriching SSIs onto that data, but you don't really match SSIs because obviously they're not the same, so they can't match. But there's a transparency and a sharing to let one party know where you're expected to deliver or receive from. Similarly, utilising the SSIs as part of the economic match allows you to create a PSET, which again is hugely important, so you can agree on why that should settle. And the reason I mentioned about the engagement with the CSDs and so on is, as we started to get more insight into the CSD process, the pre-settlement match that the CSDs operate across region, and layering the similarities of what we do from a post-execution matching perspective, we do see a huge overlap of matching fields. I mean, it's not exactly a 1-for-1, 100% overlap. There's some nuances that the CSDs need that maybe aren't yet being utilised in CTM, but there's a huge overlap, and it's why we've always been hugely confident in saying that, same day matching, utilising SSI enrichment, utilising PSET enrichment, and where needed PSET matching, that can only benefit the downstream process that the CSDs then need to operate to pre-match before settlement.
Thank you very much. We have Jesus back with us. Jesus, maybe flipping back to the inventory management issue. Obviously, as a CSD, those issues are sort of somewhat outside of the control of the CSD, and also more than likely outside the control of the direct CSD participant as well. But obviously, as you sort of alluded to in your first intervention, the growing use of partial settlement tools can actually help optimizing the inventory that is available. So maybe if you could tell us a bit more about how the use of partial settlement has been evolving, and whether the industry is actually using it now.
Okay, thank you, Pete. Sorry, unfortunately for the disconnection. I was pretty to finish, so finally I think we did it. In this case, the evolution of the partial settlement is very curious, because we must say that from 2023 hasn't changed a lot. It's very, very stable. And even we can say some figures. In value, we have the 68% of the transactions eligible for partial, and in volume, 63, which means that the participants wants to have this candidate to settle partially. It could be the case that settle partially or as a whole in the first attempt, but at least they had the intention to have them partial settle if needed. As probably 68, some people could consider that this is not enough. The question is that probably the last analysis that we have had is February, March 2026, because we take advantage that yesterday and the day before we had the MSC and we were having this discussion, but it's probably a bit premature to have the community change to the agreement that we have agreed or reached in the consensusly in the task force that we have under the governance of the industry committee, T+1 industry committee in such partial settlement task force. It was clearly agreed that the idea is to allow its transactions to settle partially by default. The idea is to have as maximum or as huge as maximum number of transactions, and obviously the related amount of those transactions potentially be settling partially if needed. The idea is to have them settle as maximum as possible. And probably this is the value of the partial settlement, to try to optimize the settlement system in order to settle as maximum as possible. We hope with this that probably in the coming months, we will see an increase in the percentage of the transactions eligible for partial. Let me tell you that also in the task force, we have agreed that only 2 cases of not accepting partial settlement, only 2. One of them, we call it exemptions, because it's clear a consensus in the market that some instructions, some type of transactions are not good to have them as eligible for partial settlement. Securities lending is obvious, corporate actions for sure, and portfolio transfer, because nobody wants to have part of the position settled and the other remaining when you move a customer from one place to another one. And also, in order to have a potential situation that there are good reasons to avoid a partial settlement, but in that case, these good reasons have to be clearly explained sufficiently and with good arguments, the community will accept exceptions, bilateral opt-out, case by case, justified situations. In this case, the participants, the counterparties of the transaction had to discuss and had to agree on that. The idea is to minimize the number of transactions that are not subject or eligible, for partial settlement. I can say that this has been a very constructive and productive consensus, and hopefully we will see results soonest. Another element that we shouldn't avoid or we should not forget is that ESMA, although pending to have the final document fully signed by the European Commission, will force all FMIs, all CSDs to offer orthopartial. It will not be a potential feature to be offered. It will be a mandate. We, all CSDs, have to offer this to our respective communities, despite what I have already explained before. And just a last word on statistics. Not to focus only at the end of the day. If we do that and we see only the results at the end of the day of partial settlement, we will lose part of the benefit. And I would appreciate if we can have the slides in the screen, because I have had connection issues. Probably is much better that you will solve them. Statistics from T2S. The next one. Next one. That's one, exactly. The statistics, the previous one. In any case. Okay, well, I will explain. Statistics for T2S are very much clear that shows that many of instructions, mainly DBP, which is the following graph, but let's keep here a little bit, are not sent eligible for partial settlement, but fully settled at the end of the day. You see the red part of the graph. You will see instructions that are settling as a whole at the end of the day, and the orange the same. The red ones are not eligible for partial. The orange ones are eligible for partial, but settle fully in one attempt. So the idea, someone could have the conclusion that, oh, at the end, partial settlement doesn't give benefit, which is very clear a wrong conclusion. And let me tell you, because we have also statistics that clearly shows that the settlement efficiency increases very significantly in every settlement window slot, in every partial settlement slot, in every partial settlement window. In that moment, the ratio of the settlement efficiency, mainly on value, increases a lot. For that reason, the conclusion, crossing all the data together, because at the end, we should be seeing this from an holistic point of view. Crossing all the data, we see that the benefit of having transactions eligible for partial is not only the direct element settling partially this instruction, but giving the opportunity to those instructions that are not eligible for partial settlement, giving inventory, and we are speaking about inventory, giving position to those instructions in order to allow them to fully settle. So the question is, colloquially speaking, we can use this comparison, having as maximum as possible number of instructions eligible for partial is the oil, the lubricating oil of the system, of the motor, because allows other transactions that cannot settle partially to settle as a whole. So the conclusion, all in all, is as many instructions we have eligible for partial, the settlement efficiency will circling benefit even more. So the idea is just to allow the motor to be very oiled in order to be very, very efficient.
Thank you very much, Jesus. I'm going to stick with you actually and sort of ask you for your views on the way forward. So where do you think attention should focus? Do you think future work needs to be led by the industry, so it's about market practice and usage, or should there be more regulatory intervention? And maybe to just add on one question that's come in via the chat, one suggestion for a potential way forward would be to make it so only the receiving party can opt out of partial settlement. So the delivering party has to offer the partial. Any thoughts on that?
Okay, yes, we have a statistic also in the MSC with regards who is in some occasions colloquially speaking, the major offender, if the receivers or the deliveries. I can tell you that this data, and in both, in volume and in value, is a very clear demonstration that there is no section of the transaction that is the main using the no eligibility. The most of the percentage is because both parties do not agree to have partially, or more or less the same piece or the same number of percentage for the deliverers and for the receivers. So there is no specific issue there is no issue on a specific side, I would say. So, and coming back to your previous question, to the first question, in my personal life, I prefer always to have options that to be forced to do something. I think it's also the Europe style, no? Not to be forced to anything, but to have many options, and the people will use the best one, which is more suitable for their business. So taking into account this, and specifically on I would apply it in everything, but taking into account partial, I think that the task force has given a very clear message to the whole industry. Please, guys, very colloquially, use intensively and extensively, except the exceptions, and a very valid reason sometimes happens. But part of that, extensively and intensively use partial settlement in order to allow the system to be more efficient. Probably it's true that we should adapt we should give some more time to the community, to specifically those communities that are not used to use it, those customers, because at the end it's not a question of only FMIs, not only direct participants of the FMIs. No, it's the customers of the participants, the customer of the customers, and subsequently. So at the end, if someone says no thanks, at the end, every of the members in the two sides are forced to not have this eligible for partial. So I think it's a question of responsibility. Everybody has to think that partial settlement gives more efficient, and at the end it will redundant to everybody. No penalties, less penalties, more efficient, less time to react, because with T+1 we will have less time to react. If we have as maximum as settle as a first time, better, because if not, we have to manage exceptions, we have to manage incidents. So it's very important that as soon as possible we put this eligible for, we put these structures eligible for partial settlement.
Thank you, Jesus. Pablo, very quickly, I mean, AFME has also done a lot of work on partial settlement and hold and release in particular, as well as other guidelines on the use of PSET. Can you maybe tell us about those and the work AFME is doing to sort of drive industry best practices?
Yeah, sure. Happy to talk about those. So we recently this year we've published some industry best practices on one of them that is about better usage of place of safekeeping and place of settlement. As I was mentioning before, SSI information, place of settlement is not an economic field itself, but it's one of those fields that is behind some of the main drivers of settlement fails. I think especially it becomes really important to have accurate information on place of settlement particularly in cross-border scenarios. And as Jesus was just mentioning, with a reduced and compressed settlement window, it would be even more critical to have that information. We know that there are some proposed entry into force of the proposals from ESMA with regards to the revised CSDR RTS that are expected to come into implementation in December this year. So namely, PSET being mandatory in allocations. The best practices that we did on PSAF and PSEF, and we did them jointly as well with members from UK Finance and the Investment Association, and they were looking to provide educational material and also guidance to industry participants to better prepare for the T+1 roadmap. And also following on some of the recommendations from the UK Accelerated Settlement Task Force in its final recommendations report, and also some of the works that have been carried out by the European Central Bank's AMISECO Securities Group that published in October last year a very comprehensive report following on the works from the previous EPTF report in trying to identify which barriers to post-trade efficiency still remain in Europe. So that's in relation to PSAF and PSET. And then with regards to the other industry best practices that we've published this year, and similarly as well in the same spirit of facilitating the road to T+1. And I'm not going to be talking largely on partial settlement, as Jesus has sufficiently covered that space. But we have provided some guidance which hopefully is educational and useful for industry participants on the functionality of hold and partial release. Hold and partial release allows industry participants to effectively manage when and to what extent a matched settlement instruction actually gets sent for delivery. In terms of what are the benefits of hold and partial release, I would like to maybe sign out special case on those firms that use omnibus accounts. I think when our firm is using segregated account, hold and partial release doesn't probably add much value because there is not that risk of commingling different securities, that are in the same account. But it becomes really relevant when it comes to securities from different clients that are part of the same pool in the omnibus. And imagining that, for example, the underlying client of the instruction doesn't really have the securities ready, the hold can prevent from those securities being pulled from some of the client's assets. And therefore, once those securities become available, then the release can take into effect, and that can help manage settlement efficiency. And also just more generally talking about the benefits of hold and partial release. We've talked about improving, obviously, settlement efficiency that can reduce as well the number of and the value of CSDR cash penalties. It also enhances the management of inventory, and as well, it helps with the internal processing and sequencing of firms that may be relying on other internal processes to be fulfilled and terminated.
Got it. Thank you, Pablo. So all part of the journey towards T+1. And MJ, maybe a few words from you on how DTC are supporting the industry on the move to T+1.
Yeah, of course. I like to think we've done a lot already, and we continue to do so. I think if you look back to the successful US T1 migration, we've now kind of become the industry consultant in regards to T1 preparedness and projects and advice and so on. But it's been fantastic. We've built and formed some amazing relationships now with market infrastructure, regulators, policymakers, obviously trade associations such as AFME, and of course the T1 task forces. From that allocation confirmation perspective, it'll be no surprise what I say next. Obviously, CTM has been driving same-day allocation across cash security markets for a few decades now, particularly in Europe. We're very keen to see and very happy that the deadlines for the T0 allocation confirm process have been brought forward to December this year. So for those on the call that aren't aware, the recommendation actually goes live December this year, 2026, to make sure confirmation allocation is complete on T0. It's obviously no secret anymore. It's a very well documented and well verbalized project going on that we are mandating PSET as a data point in CTM. That goes live on October 3rd this year. So we're not mandating PSET matching, but we are mandating that a PSET should be present on all CTM messaging from both the buy side, sell side, block and allocation. And again, it's very much in line, like I mentioned before, with regards to PSET recommendations from both UK, EU task forces and investment and industry committee. What we've also done is to start to work with our clients to how we can start to penetrate this manual client base, or the long tail of manual clients. We've put together an enablement package, so I won't get too commercial before you cut me off. But what the package will do is give these smaller firms that don't have a big resource or a big budget to automate their post-trade workflow, we give them a web-hosted matching user interface with full trade upload functionality, a degree of access to alerts so SSIs can become digitized for the broker dealers that are trading with these clients, as well as enrichment facility to get PSETs into the CTM trades. We also have an additional module where we can allow these firms to be part of our settlement instruction manager gateway, where we can also send instructions down to their core network, the local agent, the CCP, the local agents, global custodians, and so on. We can take care of the settlement instruction too, off the back of that CTM match, and we're bringing that to market at a very, very low cost. And we're working with the broker dealer community, trade associations, and industry bodies to really spread that word across that manual client base. Obviously, SSIs have been mentioned a lot today. No surprise that DTCC SMEs were part of the FMSB drive to standardize and formalize the SSI process around what should be used, formats, data points, and so on. Very, very pleased to say that Alert is obviously fully compliant with all of these standards. From a more of a benchmarking analytics perspective, we significantly enhanced our data analytics tool. So anyone that's an ITP client gets access to the tool as part of the core package. And this tool is now going to provide, immediate insight into your firm's T1 readiness, across all of your markets, not just UK, Europe, and so on, as well as provide a really consistent daily view of yours and your counterparties matching performances. We're looking at behavioural patterns and points in the day where we see spikes in matching and so on. Obviously, it's been said many times, and the team's got a fantastic brand in the market now. So our DTCC consulting team, they're out there helping clients today, navigating T1 projects and challenges. Again, any more information, reach out to your or DTCC relationship manager. And finally, something I can't go into too much detail on, but something I'm very excited about is we are looking to bring our match to settle workflow to market via a production POC this year. We're working with a very prominent European-based ICSD, as well as a global execution broker. And what the workflow in essence does is as soon as the trades get to match agreed status in CTM, on behalf of that broker dealer, we will send their instructions straight into the particular CSD so they can hopefully get speed of efficiencies, accuracy of data, and potentially also start to mitigate some of the late match penalties that are hitting the market today. So definitely more to come on that when I can share more information.
Thanks, MJ. That was the softball question, but there's a couple of questions in the chat aimed towards you, so I'll put those to you now. So, data validation on SSIs specifically. So how does DTC ensure that SSIs are valid both at the time of input and on a kind of ongoing basis?
Yeah, so we've always had, a high degree of validation tools before SSIs can get into the database. Obviously, we work extremely closely with the global custody community where they're using that interface to get SSIs in. Validation is something that we've always tried to focus on and enhance as much as we can, and we continue to enhance the platform itself and make those validations more robust. It's not a finite journey; it just continues and continues. Obviously, we've put a lot of enhancements into our alert key auto select or ACAS package, where clients can select a bespoke set of requirements. And again, and you've probably seen recently our publicised collaboration with Simple. So we're hoping we can start to see what we can do together to bring more efficiencies to market.
Thank you. There's another question on SSIs. I think you've partly answered it because it was about whether you're sort of in line with the FMSB standards, which I think we can safely say you are. But it also asks about whether your system speaks Swift. So what's the kind of what's the messaging architecture that you use? Is it Swift compliant?
Yeah, absolutely. I mean, as we said before, we've been part of the FMSB process from day one. Alert, again, fully compliant with regards to the uploads and template functionality. It's a tricky question when you talk about, because I'm looking at the question as well in the corner of the screen, is Speak Swift. We've obviously got a multitude of mapping tools to take a 15022 format into our internal language to get the SSI into Alert itself. Similarly for 20022, so those mapping tools are available. I hope that answers the question, but obviously, please feel free to pass my details on to the question asker.
Thank you very much, MJ. There's a couple more questions. We are running out of time, or slightly over time, in fact, already. But let's try and tackle these because there's a couple of interesting ones which do touch on ETF. So one asking about the primary reasons why fail rates are so high for ETFs and whether it could truly be due to lack of inventory. But I think another question separate to this sort of touches on what I would see personally as part of the reason for fails, which is realignment of securities between different markets, which is very common in the ETF landscape, where you tend to have, the same ISIN kind of issued and trading in multiple European markets. So the question asker comments that it can be quite cumbersome to move securities between markets, especially involving a non-T2S CSD, e.g. ETFs issued in an ICSD. So from my perspective, I would see that as that sort of realignment process as part of the driver of fails in the ETF landscape. But just wondering if any of the other panelists have a view on ETF specific challenges and drivers of fails beyond that kind of misalignment, which creates the possibility for sort of mismatches and for depot realignments and delays there. Any thoughts from MJ, Pablo, Zeus?
I mean, the one thing we see, and it's probably not specific to ETF, to be completely honest, but it's understanding the eligibility criteria between the CSDs. What can be cross-bordered, because obviously not everything is eligible. And again, it kind of doubles down into a lot of the work we're trying to do in regards to PSET on that initial allocation confirmation level to try and get that locked in and correct. And where there's eligible cross-border activity, making sure we can inform our enhancements to allow that logic to pursue through the life cycle. Maybe doesn't focus particularly on ETF, but obviously the PSEC challenge, goes across asset class.
I think it's definitely an area that's ripe for sort of further industry analysis because it does seem to be a persistent challenge.
A couple of words. Sorry, Pete. Unfortunately, the camera now is decided to be in black. So today is the bad day, unfortunately. And the question is, with ETFs, we are narrowly monitoring in the MSC because we consider that it's true that the settlement efficiency rates are lower than the average, and is one of the securities that is suffering a lot due to their peculiarities with the market makers and everything, and also because, as mentioned by Matt, because not all CSDs have this kind of security very actively. So it's true that is in Europe now is being seen that many CSDs or significant number of CSDs are taking this type of assets in their portfolio, and they're investing in order to have more automated cross-border settlement in order to move or to have this asset more easy movement between different accounts, different participants in different CSDs. So hopefully this would help an improvement of settlement efficiency rates. We could consider, but probably something that we have to closely monitor in the coming months.
Thank you, Jesus. I always like to come away with an action. So I think there's definitely scope for some kind of further cross-industry analysis on the specific drivers of fails and challenges in ETF settlement. So we will take that one away as AFME. We're out of time, but maybe an action for everyone on online. If you want to hear more from AFME, from SIX and DTC and several other industry experts, then please do sign up for our Optic conference in October, taking place in London. We'll have much more on settlement efficiency, T+1, as well as broader trends in post-trade operations, particularly with a focus on how new technology is being deployed. So there will be a registration link circulated in the write-up of this webinar, which you will receive in the next few days. But with that, I would like to close the call, say thank you very much to Jesus, Matt, and Pablo for joining me. And thank you very much for everyone for listening in and sharing your contributions via the chat. Thank you and have a great day.